Alright, welcome back to MMG. Let's talk about the news today. And then this weekend I will do TA and charting and technical analysis. For now, I'll just update you guys on the price of gold and silver. Well, silver is actually back above 18 and it looks very strong here on the 12-hour and daily. Let's take a look at gold real quick. Looks like the MACD is about to cross back up to the upside. RSI, momentum, they were all of these oscillators were oversold on a 12-hour, and the price did get up to 1560 earlier today. But I'll do TA. Looks good. Looks bullish still. I posted in the newsroom and the private group, of course. So it's looking good so far still for a nice rebound. But I'll do more in-depth TA about the markets this weekend. But so a lot happened this week, and I know I didn't make any videos, so I sort of have to make up for it now, and we're just going to talk about the news and what's going on. I'll give you guys my opinion on current events and whatnot. It's been pretty interesting, right? Very eventful week, and unfortunately I didn't make any videos. Alright, so here's the newsroom. I'm just going to go off this and then I'll look at some articles. So the tariffs happened, right? Or I mean, not the tariffs, but the trade deal with China. It's not as good as people think it is. Most of the farmers are actually getting subsidies, which is, being subsidized by the feds, right? And taxpayers are technically the Federal Reserve, right? But everything else, it's a little overblown. So the trade deal isn't as great as it's been talked up to be. Of course, it's only phase one. How many phases, I don't know. I did not think we would actually get this far, not even a phase one. But China is in big trouble, and anything will help both countries here in this economic sort of warfare that, no one wants to admit is happening. I mean, there's big holes in this trade deal. And honestly, I do not want to get into the specifics of it. But I was listening to Peter Schiff and he made a really good point, right? So if I were China, right, what I would do is, yeah, I mean, they need pigs, right? Because they just had this huge famine of pork. There was some sort of swine flu or something, and pork prices are through the roof. They've slaughtered like tens of millions, hundreds of millions of pigs, something like that, in China. And I mean, there's huge demand for pork, right? And they just slaughtered like over 90% of their pigs, so they're gonna need pork. They always need soy and some agricultural food, although they could always go to emerging markets for that supply. But why not make a trade deal, right? And get it from the US if you're China, and possibly a few other things, right? Now, in this trade deal, was there a lot of deals for manufacturing? Not really. I don't see how it brings back manufacturing. It was just a deal for the farmers. and agriculture. Now, if I were China, what I would do is I would sell my treasuries and sell them on the market, right? Get cash and then buy the imports from the US. Now, that's extremely negative for the US if that happens. Why is that? Well, I mean, they're going to dump US debt, right? Exchange it for the currency and not even hold the currency and get real goods for it. Real, you know, agricultural goods. What else? Energy. Get some shale, natural gas. Get oil, because the U.S. is now a net exporter. Even though this is going to drive up prices for domestic, unless the world just keeps ramping up in oil production, because a lot of these oil companies are not doing so good. They don't actually, they're not that profitable. They don't have the revenues when it comes to cash. They still have cash outflows, not net inflows. So I don't want to get into that either. I'm just saying, if I were China, that's what I would do. I'd dump the debt, exchange the worthless debt for cash, and send all that cash back to the U.S., which would also technically could cause inflation in the U.S., and then extract the resources from that empire. So technically, they're getting. It's almost like a subsidy, or it's almost like China's gonna get just free resources from the U.S. because in the grand scheme of things, what are the U.S. treasuries worth? What's the fiat worth? Not much. I mean, they're printing it like crazy, and nominally, I mean, the U.S. doesn't have negative yields, but it's pretty damn close. And the Fed doesn't want to go to negative because Europe already has done that, and that's at the nominal, right? Yields. And obviously it doesn't work. It's insane. Who would lend money, buying bonds, and then you get a negative yield, meaning you buy the bonds and you lose money. I guess if the world becomes so bad and the markets, the total world economy falls apart to such a point where you would rather guarantee to lose 5% a year rather than lose 20, because you can't go into stocks, right? Because those are at all-time highs, just ripping higher at 90-degree angle right now. It's a melt up. So I guess a negative yield of 5% might be it might be a good opportunity in the future, which is sad to say that that's where we're getting to, because the chase for yield is it's very hard to find yield without going into junk rated debt these days, and that's with an all-time high market, right? And that's supposedly with the greatest economy ever, globally, not just US. So it's gonna get interesting. That's why I'm saying, I mean, gold and silver and some of the other commodities are the only things that are not in a bubble and are, in my personal belief, safer than getting negative yield, investing in negative yielding bonds, which is insane. There are tips though. You could always look into those. All right, where was I? So this trade deal, was it buy the rumor, sell the fact, as I was saying? Not yet. I'm actually very surprised. And it's kind of frustrating because they're doing the repo operations, and is that money just pumping the market higher and higher despite anything? A lot of people believe that. I'm going to have to I'll talk about the repo market again. I came across a good video. Who was it? Jeff Snyder. He had a great interview. I think it was on Real Vision. I'm not. I forgot. Anyways, I'll talk about that in the repo market. Let me just get through current events. There's so much I've missed. Oh yeah. So the South Sea bubble was like the first major bubble, financial bubble the world's ever seen, because it was based off of the first pretty much international corporation, but it was really the only stock you could buy at the time. But it became a giant bubble, right? This was after tulips, though, and it's the 300-year anniversary. 303 for you tinfoil hats. Um, so Germany, right, the strongest European economy, based off of manufacturing, which is making things, which is real economic productivity and growth. Well, they're really those negative rates aren't doing that so great for Germany, are they now? And of course, they all have a housing bubble, and then all sorts of other things that are going on right now. And the possibility of Brexit and migration, whatever. But they're cutting 400,000 jobs, auto jobs, in the next. It's planned to be phased in the next like 10 years. But 400,000 auto jobs, that's that's a depression type of unemployment and laying off of people. 400,000. That's 400,000 good paying jobs. That's pretty much the middle class is getting wiped out. I'm curious to see where all those jobs are going to go. Again, though, there's a huge auto bubble, and it's global, guys. I mean, there's so many cars now. Uh, it's the market's very oversaturated. And then, everyone in Europe is pretty much tapped out on credit. Their socialism isn't really working out. The Eurozone, the UN, all that, not working out, right? Their banking sector, Deutsche, it's just a complete failure and disaster. And they're boomers, right? Their retirement boomer, that age group, that demographic is starting to really take more than the younger generations can put in, right? When you have too many, when 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 you're putting the carriage in front of the horses, or when there aren't enough horses pulling the buggy, right? Target, one of the largest retailers in the U.S., missed earnings, right? Well, they had their holiday sales missed estimates. So what that means is their earnings are going to be weaker, and this is going to be across the board. I have a feeling for this holiday season. We'll see. I mean, earnings are going to come out soon. Earnings season. Right. I listen. This relationship between China and the U.S. and this trade deal. If you read the fine print, and I listened to another podcast they did, and they were saying, or maybe it was Schiff. I'm not sure. Uh, it's like the deal is not in writing. Anyone at any given moment could just break the pact, and they probably won't even announce it. And actually, I heard that in China, the news is reporting it completely different. It was funny though. They had like this huge ceremony, and it was all over the news that day, and they made a huge big deal out of it. And it's like grandstanding, right? It's to make it's to make Trump look great for this year, right? Because we have uh, elections coming up, so he's really gonna milk that thing. The irony is the North American trade deal, with like Canada and Mexico. That sort of just slipped in, and they did not make a big deal about it. And I listened to another podcast, and they were talking about how it's. And someone posted an article in the chat groups where it's not that great either. It's not that much greater than NAFTA was. What I mean by that is it doesn't make the U.S. any more competitive on a global stage. If anything, it pushes that globalist agenda where you export jobs across seas. You don't have to pay taxes across seas, and you get cheap labor, and these mega corps, they could buy off other smaller countries, right? And then that money never really comes back, and these are U.S. companies doing that, right? And it's the problem these days, right? It's what people talk about when they talk about globalism. It's like selling out your own uh, country where you started, and then just being some sort of global conglomerate. U.S. and China signed what they're billing as the first phase of border trade pact on Wednesday amid persistent, yeah. So the 95 billion centerpiece of the trade deal is already in doubt. Right. So I posted this in the newsroom if you haven't read it. I don't want to get too much into it. I'm just covering the basics. If you want to know more in detail, just it's what the newsroom's for. You can read the articles, but it's not that great. All right. So of course, Trump's gonna play it up as much as humanly possible. I don't blame him for that. He could always say he's gonna make it better in phase two, but I already gave you guys the reasons why. It's long term. It's nothing really. So you would think the markets would be smart enough to buy the rumor for the past like many months, and then sell the fact, and they haven't. Dow's hitting 29,000, right? Oh, here's a good trade deal summary. China will buy pigs it desperately needs, soybeans it needs to feed the pigs, and whatever oil it can't buy from Iran due to U.S. sanctions. China also promises to buy more if it can, but won't. It's funny. It pretty much sums it up, right? This is a really nice picture. I hope you guys like my new intro. Paid good money for that. Oil prices rise as China agrees to more U.S. energy purchases. Exactly. So this is crazy. Look at this. Over 40% of listed companies don't make money. You can't make this up. In history books, it's going to be, people are going to be like, wow, how did they not see that? Looking back, like maybe 10 years from now, 20 years from now. Literally 40% of companies, they don't make a profit, guys. If you don't make a profit, your company goes bankrupt. But because the stock market keeps going higher, they can sell shares and keep themselves afloat, and take on more debt and loans. These companies, they'll point at their valuations based off of stocks, and then take on more debt, buy more of their own stocks, and do it all over again. And it turns into, it's how can, you know what? It's kind of like you lost your job, but you still have good credit or decent credit because the credit agency, the regulators, right? Wink, wink. By the way, the people who regulate now end up working for these companies in the future, making way more money, right? And that was in The Big Short. But anyways, they still have good credit, and then they point at their stock shares and their valuations and just revenue, but Never mind your costs, your profit margins, and or anything like that. But and then they, with magical accounting and pumping their own stock, this and that, it looks like they have a ton of equity and blah blah blah, and then they could borrow even more money, and that's equivalent of you lost your job, so you have no income, but you still have good credit, and then you just like get 20 credit cards, and then you pay off your next credit card with the older credit, or pay off the older credit card with a newer credit card, and then you get a larger line of credit, and you just keep doing that over and over again until the interest rate catches up to you. And that's why, if the federal funds rate, the interest rate that the Fed controls, if the free market, which is trying to push up the interest rates, if those interest rates spike and they go up, and it doesn't take much, right? All of these loans go bad, like all at once. It's just like boom. And then the house of cards falls apart. So for you crypto haters, this is a good valid point. Like you know, you love Bitcoin, you get paid in Bitcoin. You love coffee, you go buy coffee, and then the coffee owner knows how much money you have because it's all traceable, right? Yeah, of course there's ways, but I don't know. I think if you have enough computing power and forensics, you could probably trace it all back to wherever it came from. And just buying coffee could, of course, there's ways, but most people aren't tech savvy enough. I just wanted to put that up there. Has a point. Right. So the U.S. passes the USMCA, giving Trump a win before impeachment trial. And they did this like right before he got impeached. So this did not get a lot of coverage. His North American trade deal, probably because it's not that great, right? It's not really all that better than NAFTA. So, although I will give Trump credit for before Obama was leaving, he wanted to do this crazy international trade deal that just would have literally null and voided like the Constitution and would have given power to like literally like foreign nations over this country. It was insane. Of course, 99% of Americans have no idea, don't care, and mostly because when you talk about this stuff, people get censored and pushed down in the search results, and that's why I don't want to talk about this stuff, because I do like growing. Because if I'm not growing, then there's no point in me doing this in the first place, right? So that's why you guys need to share the videos, buy my stuff, because there's not that much upside to doing this much longer. It almost looks like. U.S. Senate passes a North American trade. Yeah. Oh, look at this. World largest hedge fund Ray Dalio says gold's going to $2,000. Listen, guys, for months I've been saying gold should be at 3,000 right now. Well, that was months ago. Right now, with everything that's going on, should be like at 4,000. But no Americans buying gold or gold stocks. None of them. I can see that for myself, because most people in my private group are, I would say about 60% are foreigners. That's because gold and silver is hitting all time, well, not silver, but gold is hitting all time highs in their currencies, and it's not in the US. And everyone's still buying, Tesla and Apple, and they're buying all time high stocks. And until the stock market corrects, Americans will not look at metals. And as long as people think Trump's going to get reelected, because most people who buy metals are actually Trump supporters, right? and they feel comfortable. They think it's great. They think, they don't know about the intricacies of the markets and the economy. They just like hearing Trump speak, and it all sounds good. And then, they feel good. Are they getting raises at their jobs? Most are getting small raises, but it's not keeping up with inflation. Also, uh, this year alone, I mean, most private workers, their insurance healthcare just went through the roof. It's like up 20. The CPI, the CPI data from the Fed and all that, they even admit it's up 20 some percent, which in real life it's up probably more. That's insane. That's like thousands of dollars a year or like some people are paying. I hear some people are paying 3, 4 thousand. Depends if something's wrong with you, right? It's insane. Now government employees, they don't feel it at all because it never goes up for them, and that's socialism. Well, it's borderline communism, but you know, everyone still thinks the U.S. is, a capitalist country. It's not. That's Everyone's blaming it on capitalism, but it hasn't been capitalist in a very long time, like over 60 some years, right? So that's what's so sad about this entire situation. The Wall Street, the entire market's not even capitalist. They're printing money, and through the repo market, it's going straight into the stock market. It's insane. And the irony, so Bloomberg, he's not gonna win, and he knows it. But he said he's gonna give 1 billion. He's gonna spend 1 billion promoting whoever the lefty candidate is going to be. I wonder if the Bernie actually makes it. It looks like the establishment lefts don't like him. Wall Street definitely doesn't like him. But you guys need to understand the left. All they do is complain about capitalism and Wall Street, but they're funded too. Their biggest donors are Wall Street, just like the right. I mean, there's no different. They just, always look at what they do, not what they say. And but the Burn, he's actually like he's legit for real a commie. And Wall Street doesn't like that, right? He's not gonna play. They're afraid he wouldn't play ball, and he's too extreme, I guess. But that'd be funny if I don't know. Whatever, we'll see. It's still far away. It's still about 8 months away. We'll see. The primaries is like 6 months away, and it's gonna get wild. It's gonna get interesting. My channel's gonna, who knows, disappear in the next 6 months just because I said these words in this video. All right, here's a good chart showing you all the rallies in the S&P 500 and all the repo injections of money into the banking sector. Oh yeah, listen to this. They're actually talking about doing repo, like letting hedge funds get some of that repo money. This is worse than QE. This is QE on steroids at market all-time highs. So something blew up. Long-term capital management, which I talked about, right? In the late 90s or 1999, 2000, a huge hedge fund blew up that almost took down the entire system. And Jim Rickards was like the lawyer or something, trying to help control the damage there. He worked for LTCM. But something like that happened. It's either a bank, maybe it's a hedge fund, maybe it's both. Nobody knows yet, but maybe it's all of them. Who knows? But when the 10-year yield spiked earlier in 2019, it broke something in the system, and that was the free market trying to push up yields, because the bond market knows how messed up this entire economy and bubble is. So they're trying to push up yields because who's going to buy almost negative yielding debt? Um, and that almost blew up, and that probably did when it spiked up. It probably blew something up in the forex market. Who knows? Anyways, and the Fed, I'll give them credit how sneaky they are, right? They just went ahead and called it, repo because it's not long term, but they're rolling it over now, month after month, week after week, and it's never going to end. It's pretty much what it looks like. They can't end this. And it is QE. That's why it's QE. But they say it's not QE because there's a due date on it, and then they roll it over and do it again. Anyways, they're literally getting in front of the crash. So this is what they didn't do in 2008. They're not stupid. They're trying to prevent it. I think they're so scared of what's going to happen that they can't let the markets drop. Now eventually they're not going to be able to stop it. It doesn't matter how much cash you throw at it because the debts keep going up. The Fed's balance sheet keeps going up. All governments' debt going up, corporations' debt, the debt keeps accumulating the longer they do this, and eventually the debt will just drown out any economic growth or what's left of it, and then at some point it's just insanity, and it doesn't, no company will be making any profits, and then what, you're gonna keep buying stocks? That'd make no sense. So, anyways, I'm going to do TA, and I'm still sticking to my all-time high call, even though it's off by 100 points on the S&P 500 now. So 100 points, I guess I didn't nail it on the head, but if we still get a correction next week, or even the week after, I probably am the closest out there so far, unless someone listens to me and then calls it. All right, poll finds most people are okay with raising taxes on other people. That's because most Americans don't pay. It's only like 30%, 40%, some small percent. It's a smaller percent than people who don't pay. Of course, they all pay. It just gets pulled out of their check throughout the year, right? And at the end of the year, they get a refund. So that's why they think that they don't pay, but they do pay. And then on top of that, they have no idea about the inflation, right? Anyways, I mean, this is literally it's in the Bible, right? Don't steal from your neighbors. Well, this is stealing from your neighbors, people who work harder than you. And what happens when you do that? Well, at first you might get a little bit of freebies here and there. But eventually those people are going to stop working, or they're just going to leave. Just going to get out of Dodge. And then what? Well, they're going to fire people. So the people you want to tax, the people who get taxed the most are the people who employ everyone. Or they're the business owners. And then they'll just start firing people. And then and then the people who voted to tax their bosses lose their jobs. And then they get on the dole, and then the debt keeps going higher and higher. Then they print more money and more inflation, and then everyone becomes a poor, miserable bastard, right? And you become third world. All right. Yeah, so, earnings, fourth quarter earnings for 2019, I think that's the needle that's going to prick this stock market bubble. Now, am I saying it's going to be a huge crash? No. I have a feeling it's going to be a nice 15-20% drop, maybe more, and then they're going to come out with even more easing and lowering rates and PPT, and it'll bounce back up. It's not going to be the end of the world in 2020, especially because it's election season, right? Also, a secret to Trump probably getting reelected will be healthcare. He's going to promise to fix that. So that's his Trump card, right? And then he's gonna taunt, the trade deal went great. And the market, by the time we come around towards the end of this year, by then maybe we already had a 20 to 30% drop, but it'll be, it'll be rebounding towards the end of the year. So let's go to a chart real quick. So let me go to a monthly chart, right? So here was my theory chart. So maybe later in the year, we get the huge correction, but it'll be rebounding like this towards the end of the year. Like, that's what they're probably going to try to time out with the markets. And then re-election, and then the market, because at that point, there's going to be probably serious problems all across the world and in the U.S. As the system prolongs with time, it becomes more complex and the debts just surmount. By the way, let me zoom out, show you guys. This is the S&P 500 monthly. Look at that. It's going straight up. And people are like, everything's fine. That's ridiculous. You guys want to see Apple? Look at Apple. What is that? Oh man, it's gonna be some great shorting opportunities, especially if you know how to do options. Oh boy, look at that. That's ridiculous. Oh yeah, Amazon just became Amazon? No, Google became $1 trillion company. Yeah. I'm not gonna say anything. All right, because this platform, right? All right, let's continue. Yeah, there it is. Another $1 trillion company. Trillion with a T. That means they're worth more than like 90, probably 90% of countries in the world, maybe 95% of the countries in the world. I don't know, that's a little high. Maybe 85% of that's how insane this is. All right, student debt over 1.6 trillion. Nobody's paying. Yeah, scam. Here's a nice visual. Look how big China has become. I never noticed how big Japan is. I thought United Kingdom and Germany would be bigger than Japan. I know Japan was a huge economy in the early 90s, late 80s, but then their housing market blew up, right? All right, so let's get into this. The market is up 11% since the Trump impeachment hearings. Hilarious. All right, so oh yeah, remember her? She supposedly is supposed to be a gold bug. I really don't care. So was Alan Greenspan. He was a huge gold bug, and then he became chairman, and he was the one who started blowing this bubble. Like he he started blowing it up. So this is fascinating. So far in Trump's first term, GDP has increased by 2.6 trillion. So the economy has increased 2.6 trillion, right? And the federal government debt has increased by 2.9 trillion. Household government and corporate debt has increased by 6.7 trillion. Something doesn't add up now, does it, right? So the pace of economic growth is not keeping up with the amount of debt here that's increasing. That's what I'm trying to tell you guys. Everyone's like, they're gonna keep it up forever. They can just keep printing. It's just gonna, the market's gonna go up forever. Everything's just gonna stay like this forever. No, it can't, because fiat money is debt. I thought that was a nice picture. It's pretty much sums it all up, right? Now, imagine if he doesn't get reelected. What do you think's going to happen to the markets? That's not even considered in the markets right now. Not even priced in, right? But I think as we get closer, the market has to at some point start pricing in a chance, right? Even a 20% chance. But no one's taking the candidates seriously, except probably 60% of the public. Because if you go off of just if you go off of the votes, right, during the last election, he didn't win the majority, the popular vote, right? Now, if you go off the House, remember that in 2018, the House, the Congress, right? They lost. The right lost to the left. They outvoted them, so they lost the House. So what I'm trying to say is, probably half of the United States, like the people in it, more than half, have become sort of parasitical. And then, and what hasn't flipped yet is the boomers and a lot of employees, state employees, right? Because they might be leaning conservative off of the values, but I think once things get difficult economically and prices start rising, they're just all gonna want the udders, right? Want more of the tea. By the way, he's not even. What is he conserving? Nothing. Guys, like, this is what I don't. Whatever. This was a good video that I posted in the newsroom. You're gonna have to go in there if you want to see it. All right, the Federal Reserve is stuck in quantitative easing hell. Yeah, listen, guys. They can't ever reverse. Maybe temporarily for a month or two, just to save face and say, "Look, see, we don't have to do this." But then they would have to start doing it again, and then that would look even worse. So they're just stuck doing this, and they're just gonna call it something else, right? Instead of calling it QE, it's repo. Of course, their balance sheet's just gonna keep skyrocketing, and they can't hide that. Or I don't know, can they hide it? I really hope not, because everyone's watching it just go higher. Look at this. I don't know. I don't want to talk anymore politics. Like, I'm just shooting myself in the foot right now. Look at this. Cancel all student debt and tax Wall Street. Do you know why student debt is so high? Because because the left promised students free college, not free college, but you gave them loans so they don't have to work in the summer. Well, those loans come with interest, and you can't file for bankruptcy, and now you're a slave. There's no such thing as free, and the universities took advantage of the free money, right? The loans, the government guaranteed loans for anyone with a heartbeat. So then, what did the universities do? Well, they took advantage of that, and they just jacked up prices. I think like every 2 years, like, it goes up. Tuition goes up $10,000 or something. I don't know. It's absolutely insane. It's enslavement. Should they like cancel the debt? You know, it's good for the economy because nobody's having children or buying homes because they can't, because they're indentured servants at this point. It's why it was one of the reasons why I joined the military, right? But the other reason is every male in my family was, and I really needed the discipline. But it was a good bonus. Great bonus. What was this? Deutsche Bank cuts investment bank bonuses by 30%. Good. They're in trouble. They're like forever in trouble. It's just a zombie bank. It's a failed bank. It's just it hasn't been announced. But everyone knows. We're increasingly fielding concerns from investors regarding to the likelihood that the Boeing, yeah, Boeing is a disaster. It is a huge um, self-defense stock, though. That's why you know, I didn't want to short it or anything. Fed takes 52 billion securities in overnight. They're gonna be doing that every day. This was an interesting post by Dan here. What if I told you the stock market has years where it doesn't go up a ton or crash, which is very possible, and then that's how you become Japan, right? I mean, there will be some sort of correction, but then you know they're just gonna paper over it, and the stock market. Here's the S&P, right? Like I said, it could do pretty much. Oh, this is perfect. Hold on. I'm just doodling here, guys. This is not investment advice or anything. But, blow off top here. Dead cat bounce, bull trap. And just like kind of trade sideways forever. And then, they could say, look, your market never crashed, never had a recession, whatever. I mean, they're going to have to admit there will be some sort of recession in here, but they won't let the stocks go back to where they belong. And then people are going to feel rich because in the retirement, the 401ks and IRAs, they're going to look at those digits and they're going to think they have money. But then inflation's going to run like at, who knows, like 10% year over year, which means when they go to sell these shares, they're not going to be worth as much in fiat terms, right? So, $100,000 10 years from now may be $10,000 in today's value. So if your stock, your Apple stock or whatever went up, and you turned a huge profit, right? You invested 10,000, went up 10x. You're sitting on 100,000, and you think that's going to be great for retirement, whatever. But then 10 years, but you held on to that stock another 10 years, and then you go to sell that 100,000, but it's really only worth like 10,000 because of inflation. I think you guys understand what I'm saying, right? A lot of people have a hard time grasping that for some reason. And that's why metals are going to do so great. Again, just keeps going higher. All right, let's look at what else is going on. A market full of gaps. Yeah, there's huge bubbles below all of these prices, right? So Davos is coming up next week. That'll be fun to cover and see what the elite will talk about and decide how to manage our lives. Oh, this is the top. I thought this was the bottom. Yeah, this is pretty much what I just talked about earlier. I'm sure that the article is going to talk about that. Everywhere euphoria. Bank of America warns of echoes of 2000. Really? Everyone right now is coming out and saying, listen, it's a bubble. So they could later say, hey, I warned you. But of course, nobody's listening anymore. Well, at least the general public. Wow, 40% of countries in the world to experience civil unrest in 2020. You know, just because in the US everyone feels comfortable and we don't see anything, that doesn't mean the rest of the world's not like in serious turmoil. They're just not showing you, right, on your remote or your controlled programming, viewing, whatever they call it. This is funny. All right, so this is it. I mean, I didn't prepare too much for this video. I'm just ranting at this point. So I don't want to make it too long. Leave in the comment section what you want me to talk about, and I'll talk about it if I see it's a good idea, right? And stay tuned. I'll try to make 2 more videos this weekend about the markets and everything. I did want to talk about the repo thing. I'll make maybe a separate video on that. Um, I mean, I don't really have to go into detail, but the way they're doing it is the money is going into the markets and everything else. I'll do a little detail thing over that so you guys understand how they're doing it, and they're kind of like hiding it, but yeah, I'm just gonna leave it there. Smash some likes, share my videos, check out all the links below. See you in the chat groups.